Friends, today I wanted to talk about investment in gold because some of my clients used to ask me what is the best option to invest in gold. Before that, let us first look at what are all the options available to invest in gold, right? In mutual fund route, gold is available as a gold savings fund which will track the gold ETF, and also there is another combination called as multi-asset fund which will have equity, debt, commodities, which is predominantly gold, and international equity are also part of that, which gives you multi-asset solutions. Then as in stock market, the gold ETF, which tracks the gold prices in real terms, even though the prices of the gold is determined by London Bullion Market Exchange, right? And when I'm talking about investing in gold, I'm not talking about physical gold, because physical gold, there is a purpose. They have to do it for girls' marriage, and it is a family tradition which will be followed. I'm only talking about investing in gold with a financial perspective. In that, I strongly feel that government's sovereign gold bonds, which has been there for the last 3 to 5 years and which has a good track record, which is launched by RBI to persuade investor to have financial gold as a financial asset class. How it works? It is a scheme which has got 8 years holding period, where the price of the gold will be determined by the last 3 months of the average of the price of the gold as determined by the London Bullion Market Exchange. And at the end of the 8th year, the last 3 months price will be calculated to determine the maturity of it. And the beauty of it is that there is no capital gain, and there is no maintenance cost, there is no loss or jewelry charges and other things. It is done by RBI, so it comes with all transparency, and you can either have it as a in demat mode or in a physical mode, where a certificate will be given. And RBI used to launch this sovereign gold bonds every year, and this month, September 11th also, the another tranche is also opening, which you can always buy. And why you need to have gold in your portfolio? Basically, to provide diversification, because as you know, even though India and China are consumers of gold, the price of gold is denominated on dollar terms when you are doing here. So any dollar appreciation will also have a positive correlation, positive effect on the gold price. And if you historically look at equities and gold, will always have a negative correlation. It also gives you asset allocation perspective. It makes sense to have some 10 to 15% of your portfolio in gold, and predominantly if it is in sovereign gold bond, you also get the 2.5% interest per annum. On top of that, there is no capital gain if you hold it till maturity at the 8th year. As far as liquidity is concerned, after 5 years, there is an option where you can sell it in the recognized stock exchanges, provided there is another buyer in the exchange to buy the secondary market gold. Fine. So whenever you are investing in gold, always tag your investment based on goals and along with the time frame, so that it can also give you volatility in the increasing VUCA world, where most of the central banks are also increasing their gold reserve. Thank you.